All right, thank you everyone for joining. Welcome to LeapMeet 51, January 2022 trade log review and interactive Q&A session at the end. Let me go ahead and get. Can you guys see it okay?
Yes, all good.
All right, just trying out this new format where we put the chart, daily chart side by side to our trade log, so kind of we can see kind of what kind of day and trend it was where we decided to start playing different strategies and stuff like that. So January, as you can see, it started with a huge red day on January. Actually, no, right here. Sorry, this is where it started, January 3rd. Decent day, not too much, like not a big like a range to the day. Same thing on January 4th. 5th is where we took a huge dive on the downside, and then it followed pretty much the rest of the week. So as you can see in our trade log, the very first day where it was a green candle, we decided to take quite a few trades. A couple of them didn't work out, especially MDB. After this whole consolidation here, the idea was that it would break above this range because, as you can see in the back, like it went up, down, down, and then it finally broke above the range at the end of the December. So after a very tough December where there was no clear direction, pretty much starting at November 5th, as you can see, the entire November, it pretty much traded sideways and did not do anything at all. And then come December, it went down to 100-day SMA, bounced back up, and then down to 100-day SMA at December 20th, and then bounced back up and broke above this 2-month resistance area here, and then started consolidating again for last week of the December where everybody was booking losses and whatnot. So the idea was that come New Year, because we've made new highs here and then traded sideways, it could break higher. So we went a little bit aggressive, took some long expiration calls as well, and some of the beaten down names like MDB, we decided to go long on it as well. But that was the reasoning behind it. We opened quite a few trades, but as you can see, nothing much happened on on January 4th. We made again all-time high and pulled back, closed below. Not much happened. So on January 4th, we only did one trade because the market was pretty much trading sideways the entire day. And then 5th was this huge red day. We took one trade. It's hidden right now because it's still open, the short trade, if you guys remember it. So that was the huge trade, only one trade at that time, nothing else. On January 6th, another range bound day, tried to bounce, failed, came back down, and pretty much closed where it started. We did take a couple of Amazon and Facebook trade profit overall, nothing too exciting. Same thing on Friday as well, only one trade. Because at that point here, now after this huge downturn, there was no clear direction where market would go the next week or even that day, because we were sitting at the 50-day SMA. So that's why we didn't do much. Market was not in our favor. One thing I do like to point out here is that with market being so volatile as well as directionless, I personally started taking profit earlier. Usually what I used to do was I would wait for 20, 25, 30%, which was good. Market is good. You can wait for it. But now, as you can see, like first exit started being like around 8%, 11, 13, 19, 16, 12, 23, 16. So super early. I stopped waiting for 25 to 30% because market was turning and changing direction so quickly that any trade you can take would, and if you wait for 25 or 30%, it probably won't go there and it will turn back around and you will lose most of your profit as well as your capital. That's why, if you guys remember, I keep saying on every morning watch list that I posted, most of the time I was saying, don't get greedy, take quick profit. And this is what I meant by taking quick profit. And even the market, when market was good the next week, as you can see, so on, this is January 7, January 8, we made almost touch 100-day SMA and then bounced back and made a huge recovery on that day as well. And as you can see, we played a lot of calls. Most of them worked out beautifully, but even then, 11, 10, 15, 17, 20, Tesla was moving so fast that you didn't have to wait a long time to get 25 to 30%. But the other names, I was taking profit fairly quickly. And as you can see, also, I want you to pay attention to this $700 column. And the $700 column highlight the fact that if you have a smaller account, for example, $10,000 account, how you should be trading. So even though, as you can see, on Monday was a green day, most of the call that we took was like, all right, sorry, 0 and 1, and most of the call we took were like that. And if you were to take these two positions here, those were the only positions. Both of those positions were losing position, and that is fine. It happens, right? The point here is that I did not put any stop losses on it. But if your account is $10,000, you should have stop losses in place. Depending on market condition, it could be anywhere between 50 to 70%. If you're that low, then there is a higher chance that it may or may not, there's a higher chance that it will not recover. But in this case, I didn't have any stop losses, so it pretty much went to zero. So that's that. And then same thing, only when it's less than $700, you trade. Same thing on here, only less than $700 calls, you trade. And then Google, Amazon, and all that stuff worked out really great as well. But because of the market condition, you don't trade it. And even though I was not trading Microsoft or Facebook or other cheaper names, Apple, I was providing entry the entire time. So because I cannot take every single setup that I see personally. So what I do, I take some of them and I guide you guys through the others. So here, but if you just were to follow or this trend in here for this particular TradeLog, you will see that even with this big losses and even with very few trades here and there, you would still, at the end of the day, will end up $2,200 in positive throughout the day, throughout the month, which is a very, very difficult month. And how did you do it? Just by playing to your strength, taking profit quickly, and basically avoiding any huge trade. Like if this were to be like, if you were to take this 1900 trade and it goes against you, you probably are going to lose most, like 20% of your account in just one trade, right? So you have to be careful about that. Now moving forward, and then the next day we see another nice green day. We as you can see in our trade log, we took quite a few trades. Most of them worked out. Even Google returned like 300% profit, 100%, 97, 86, 72. But even for all those, as you can see, first exit was at 15 to 17% because I was prepared for it to go down so quickly that you would not get out. So I was like, I'm taking my profit. I'm not going to wait around. And then you leave a little bit for run up higher. But for most part, I was taking profit as soon as possible. And then come the third day, it tried to go back towards high again, break the resistance areas, but it failed. And as you can see, we can see it here, Microsoft call started failing. All these 3 calls, we took it early morning, so those kind of worked out, but this one failed. And then boom, red day again, huge one. We only took 1 trade on that huge red day. It failed, $1,000 loss. If you were to have a smaller account and if you avoided taking any trade, you wouldn't have lost any money on that day. And then even though it was a green day, we opened so low on that particular day that even though we made some decent recovery, it was still pretty low. And as you can see, we tried playing some lottos. Some worked, like Google, one of the Google worked nicely, 140%. The other one didn't. One of the shop worked nicely, 270%. But that was about it. Like there was not much to do there on that particular day. Come week 3, this is where the carnage happened the entire week. As you can see, it was pretty much going down the whole week except on Friday, where it pretty much bounced back, right? So, and as you can see, Monday, red day, pretty much we still played calls, made some decent gains, 1%, 18%. Tuesday, shop was doing rather well, so we played it, but then the second shop call failed. On Wednesday, even though it was red day, we were playing calls, and the reason we were playing calls here, it's because, as you can see, that was the day, 20th, is where we broke below this 100-day SMA, right? Sorry, yeah, 28th. We broke below 100-day SMA. That which we haven't done in a long time, as I have explained during our technical analysis webinar. So this is where my thought process started changing a little bit. This is where market got weaker. This is where I started looking at the puts, and I want to stress this fact again because a lot of time people ask me like, hey, market is red, why are you not playing any puts? And I'm like, I don't like to play against the overall trend. And that is the fact, because overall trend is up. Why would I bet against it? Like if I'm making call, like every time, like I explained last time, every time it touched the 100-day SMA, I was buying calls, and it pretty much worked the whole time, and not just here, like everywhere. 100-day SMA, it touched, bounce, it touched, it bounced. So my strategy was working just fine up until recently on last week. So when it broke on 20th below 100-day SMA convincingly, like so far down, that was like, okay, now it's probably time to start looking at the calls. And as you can see, I bought a couple of Amazon puts, worked out great. But market range was quite a bit, like it touched almost 458 and then 444, so almost $12 range on SPY, which is 1200 on SPX, and that's a huge range. So that's why I was buying puts and calls in both directions. And one of the lotto calls, the earning lottos, Netflix, I took towards the end, and you all know what happened with Netflix. So that failed miserably. Again, if you were to be a new trader, new at trading options, new at trading in this kind of environment, you should not be taking earnings lotto in the first place. So I hope you guys didn't. And that was the only fail of that day. And then on Friday, we broke below the 200-day SMA. and it just crashed to 422. So we closed at about 437, somewhere around that. On Thursday and Friday, it went almost to 421, which is a huge pullback. And as you can see, I was all over the puts. So once it broke below 200-day SMA, I was like, all right, time to switch stance. So Google puts, Shop puts, Google, Amazon. It did try bouncing a little bit. So that's when I tried playing Google calls and Microsoft calls. And on the upside, once a couple of times it worked with Tesla and Google, and then with even with the Microsoft, and then it started failing. So I was like, you know what? Towards the end of the day, it just some market was in crash mode, and we banked big on puts, as you can see, 110, 131. So 40. So, and all these lottos were like rather cheap. So if it would, again, the same rule applies on Friday. Like if it's below 700, ideally, what I would do is on Fridays, if I'm playing lotto, you need to reduce your size, right? So you can't just do the same thing that you have been doing with 0-day expiration calls. So you need to lower your size. So if normally you're paying with $700 max trade size on lottos, bring it down to 400. So almost like a little over half, right? So that way you're reducing your risk even further. If you normally trade 2 calls, then you would bring it down to 1 call, right? But all in all, that was a good day to play puts, significant pullback, and we broke below. Sorry, it was here, 21st. Yeah, not this one. That was this week. So it broke below the 200, and this is when I started playing puts, and I was like, yeah, this is done. And we closed at the low of the day as well, and that was it. And all the puts started playing. Come last week we opened super low, and I was ready to play puts on Monday as well. But I was like, let's see, let's go back. So Monday, 24th, which is right here. Right here, 24th. So we opened here, and for about an hour or so, it started going down. I was still not convinced with the way it was trading down, because it wasn't like huge drops. And we were approaching this 425 resistance area, support area as well for SPY. So I was waiting, and then it bounced, and then it started trading sideways. I was still waiting, and then it completely changed direction. Like out of nowhere, middle of the day, like around 9, it started bouncing. And once it reclaimed this SMA here, 50-day SMA, I was like, okay, this could be something. So I started buying calls at that point. And 2 of the names that popped out was Amazon and Shop. They both were very strong on that day, and I started buying calls, as you can see, and it worked on that day. Huge run up on the upside. Market tried to bounce back strongly. Touched 420, closed at 440. Huge recovery. That's a 20-point recovery in SPY. And that is something, right? So if you remember the technical analysis that we did here, on the weekend, I did mention that market is due for that relief bounce, if you guys remember. So that was another reason I did not buy any puts, even though market was trending down, because I was expecting a relief bounce. And I didn't know that it was going to come same day or the next day or the next day. But I did know that it's coming, because we were at super oversold. Like as you can see here, we were super oversold on RSI. and it was immense. It was coming. So I just didn't know when. So I was just being patient. I didn't open any trades, but when it did change the direction and reclaim this 50-day SMA, I was all over it. And we made good profit, and that was it. So where is it? So last week, market is pretty much trading sideways, right? So it pulled back significantly, excuse me, and made really solid recovery. And then on Tuesday, same thing happened. It tried to bounce over Monday's high, didn't, pulled back, bounced back, closed pretty break even of sort. And we only take 2 trades because it was market was choppy, trading sideways all day. Not much is going on. Tried playing shop, sort of worked out, but that was it. On Wednesday, tried to bounce again, try recapturing 200-day SMA, failed, pulled back. But during that uptrend, we did play some good Google calls because Google was strong on that day. So we did make some Google calls and Amazon, worked out great. And then on Thursday, same thing, choppy market. We did play calls and puts as well. As you can see, when market started turning around, Amazon didn't work, wanted to, but it failed. It did go to like about 5. I should have taken the profit, didn't, ended up losing. And then come Friday, you guys know what happened on Friday. We again pulled back to almost 427 and then made a huge recovery rally, closed almost to 200-day SMA. My Amazon, Shop, Google all made super awesome recovery towards the end of the week. But again, it being the end of the week, I was not too keen on playing any lottos or even next day calls. And another reason for that is because all the calls are super inflated right now because the earnings, a lot of big names are reporting earnings again this week. Last week we saw Tesla, Netflix, Apple this week, and Microsoft last week as well. So a lot of tech companies, big ones, are reporting earnings this week as well. So the premiums are super inflated. So that was another reason I didn't want to hold anything over the weekend. So I was like, okay, you know what? It is what it is. I'm just going to be patient. We'll see what happens next week. This entire week was Chop Fiesta, as what I like to call it. And not just Chop Fiesta like this, as you can see, this week's no range, just going sideways. Huge range. So if you can time it right, it's risky. It's very risky. But if you can time it right, you can make good return in either direction. If you don't, you get slaughtered playing puts as well as playing calls. So it's higher risk, higher reward. If you're new, if you don't know how to trade through this type of environment, it's better to stay away or better to start small. Like I said, if you were to just focus on calls that are under $7 on this here, then you would not have any losing trades. Almost all of them worked out. And that is the point I'm trying to make. So even when market is kind of shitty and not doing much, if you are smart, patient, and if you don't get greedy, you can still make decent returns, right? Like 2000 is nothing to joke off. And even if you like say didn't take half of the trade, you would still walk away with that $1,000, right? If you just take one trade the entire month, for example, let's just say you pick a good day when it was super red, for example, Monday, right? And you took this Amazon trade for $820 or this Amazon trade, right? Or Shop or Amazon trade. You're going to recover your money in no time, right? So $140 or $120, or let's just say a week before that, even if everything was going down, significantly, you played some puts here, you're going to still recover a lot of money. Or on a good day on week 2 when we had a huge bounce, you played on Monday. One of the rules that I had when I was starting out is that I would only trade Monday and Tuesday, and then just watch on from Wednesday to Friday, especially when market is tough or in bar market or we are in correction or any of that reason, or something big is happening, FOMC meeting or PAX weekend, any of that. I'm like, okay, I'm only going to trade Monday and Tuesday. I'm not going to trade rest of the week. And the reason being, I was managing my risk. Like I don't want I don't have enough experience. And that is what my mentor told me as well. Like, you learn more by observing and paying attention to what market is doing and taking notes than you would actually trading through a bad environment. Because what will happen is that you're trading through bad environment, you're losing money, you're getting frustrated, and you started making even worse decision than you were making before, because your mindset is all fucked up at that point, and you're gonna lose even more money, right? So it's better to just pick and choose, trade on good days, avoid trading on bad days, be patient, and take notes, learn from it. And that's how you get better. And then maybe if you once you see 2 or 3 corrections, you're ready, and then you can start making money, right? So that is the whole point of it. And that's what I did when I first started it as well. So if you were just to trade less, for example, you lose money here, but if you start trading on Monday and Tuesday, like, there is a lot of money to be made, right? And if you're super new, trading for like 1 or 2 months or 3 months or 4 months even, you have to be very picky with the trades you take. You can't just throw money at a trade and hope for the best, right? So that is what I'm trying to say here, that even if you, because a lot of people, they reach out to me and be like, hey, so I want to join your service. How long do you think I will recover my subscription money back? How many days or how many? I'm like, it's not fixed. But if you're smart, you take one trade day, you go back here, you take 1 or 2 good trades, and bam, you're done, right? Like each of this trade, as you can see, returns like 100, 125, 150, 150 here, 145, 150, 340. So I mean, this month was bad, but even if you still follow the rules, TRADEORE rules, and did what we asked you to do, you would still walk away with $2,000. If you did half of what we asked you to do, you should still be able to make $1,000, right? That is given that you follow the rules and you protect yourself, and you were smart about where you put your money, right? So a lot of people, point I'm trying to make is, a lot of people focus too much on that $150 that they're paying, that lose sight of the education and things that they're learning. And in my eyes, I personally think that is more important, because $150 you can get back in one trade. That's not big of a deal. But if you keep on focusing on money, and making money and losing money, but lose sight of why you're here in the first place, is to become a trader, right? That is your end goal. You want to be full-time trader, you want to be part-time trader and provide for your family, or have that extra money where you can buy new cars or a bigger home or whatever that is, right? That is the end goal. But to get there, you have to be a good trader. Otherwise, you're not going to get there. You're not going to get there by saving $150 a month or focusing on that smaller amount. You're not going to get there by that. You're going to get there by focusing on being a better trader. And that is what your focus should be. Like any career you take, you don't go to medical school and be like, oh shit, I should you know what, I'm paying $1,000, $3,000, $4,000 for this class, I better make some money out of it, or I better be able to use this knowledge I'm getting here in the future. all your focus is gathering as much knowledge and details as you possibly can, so you can be the best doctor that you can. And if you are the best, people are going to pay you to and come to you no matter what. But if you're focusing on like, oh, if I'm just doing this, I will make the most. If I become a heart surgeon, even though you don't like anything remotely related to heart, but just because that's where money is, you want to be that, you're chasing money at that point, and you will at most be a mediocre to low-level heart surgeon who works for pennies. But if you focus on like on being the best you can, even if you're, I don't know, some lower specialties or like a dentist or orthopedics or whatever, that is less glamorous than being a heart surgeon. But if you are the best in your field, you will still make a killing money, right? So focus on being a good trader, not being chasing money and monthly goals. Start looking at a bigger picture. A lot of people focus on 1 or 2 or 3 bad months, but they forget how far you have come since you started trading. 1 or 2 or 3 or 4 bad months, even, or even a bad year in the long term is not going to matter as much. I've been trading for 9 years now, and I have had bad months where I lost previous 3 or 4 months gain in 1 month. When I first started it, I was trading small, I was making money, and then one bad month come and it wiped my previous 3 months gain. And it crushed me. But did I quit? Did I take a break? Did I went away for a little? Maybe, but I didn't stop trading, right? I took couple of days break, cleared my head, a week break, cleared my head, and came back. And now when I look back at my 9 years of journey, those 3 or 4 bad months, not a big deal. I am way far ahead than when I was where I was when I started it. So start looking at the bigger picture. Stop focusing on 1 bad week, 1 bad month, 2 bad month, 1 bad day. In the long run, those are not going to matter as much unless you let it get to you and you stopped and let it stop you from doing something you really want to do or something that can change your life, right? So that's all I'm trying to say here. Look at the bigger picture. See how far you have come, how much better you are. And you will realize that this bad weeks, bad months are not going to matter 5 years from now, because you will be in you will be such a better trader and in a better place that you will forget all about it. Anyway, that was the TradeLog review for January. We still have 1 week left, 1 day left. So we'll see what happens on Monday. Quick technical analysis point of view. Let me just expand this a little bit. So quick technical analysis point of view, as you can see, 50-day SMA is curling back down, 100-day SMA is curling back down, 200-day SMA is flattening. So if we don't recover this 200-day SMA in a week or two going into February, then we can see it pull back significantly towards the bear market territory even. So keep that in mind as you're trading. So this is at one point this week, we were down about 12%. If we break below this level, then the next support doesn't come in until right here at 14.18. And then the next one is right here, and then here. in this range, as you can see, it's been very choppy. Last time when we were here, it would come up, go down, come up, go down, come up. 14, 1418 and 1460, I would say 1418 is a very strong, it will be a very strong support area for SPY if we get there. If we break below at 1411, if we break below at 403. So this 100-day SMA, 200-day SMA, we have to recapture it. If we not, then this could be the new range from 1440 to 1420 could be the new range that market trades into. Break below that, we can go even further down. So be very, very cautious. I have changed. So I am not super bullish as of right now until we recapture the 200-day SMA. I will be playing calls. I will be playing puts depending on what kind of day it is. But I won't be super bullish until we recapture this 445 level. At that point, there is a chance of recovery and bouncing back towards the 100-day SMA where we can find resistance. But until we recapture 445 level and close above it, I would be super careful with playing any calls, as well as puts. Right now, nothing is safe. Like week before, puts were all about it, but as you know, 100-day SMA break was the signal for it, and it just dropped for it, right? So the reverse is also true. If we break above 200-day SMA, we can start to bounce towards 200-day SMA as well. But as long as we stay below this, it can pull back. Again, neither direction is of super conviction as of right now because of the range we are in and the bounce and the sell-off we are having. Like, let's be honest, we're opening 10, like QQQ and SPY is opening 10 points higher and then closing red. That's a huge swing in either direction. You cannot be strictly bullish or strictly bearish. All you can do is play with the direction. Like I said, take quick profit, 15, 20% at max, and then you just get out. Don't be greedy. Don't think that, oh, this is going higher, so it's going to keep going higher. That is not going to help you in any matter. You can always re-enter in the trade. As you can see, we have done that before. Like even when we were playing short puts, I was taking quick profit, and then we would keep on coming back, right? And then taking another position for a lower strike price, and same thing. So you can keep on playing, but don't just hold and hope for a higher return. This is what I'm trying to say. If we get to 400, that would mark for 15% pullback from all-time high. Below that, things will get nasty, and we could start going to the bear market territory. The way market is fighting right now, I don't think we would get there, but again, anything is possible in the stock market. Keep a close eye to 445 level on SPY, and then break below the 420 level for even further and deeper correction. So that's the quick technical analysis for the week.